using that money that you're going to use to buy a house to save in Bitcoin, you're probably still going to outperform even with the subsidy of, using someone else's money to buy the house.
Mm.
So I don't think there's anything wrong with having a personal residence. I don't think there's anything wrong with buying one. That capital that you're using to buy the personal residence, I think you just need to realize that you're consuming the house, you're not investing in the house, and you'll probably underperform Bitcoin with that capital.
All right, top of the morning to you, Joe. Very welcome to the Why Bitcoin Show.
Yeah, thanks for having me. Glad to be here.
So I said top of the morning. It's my morning. It's your afternoon, and it's about 15 hours behind. So we typically do these chats with folks in the US early morning. Really stoked to do this. In fact, I chatted to a colleague of yours, Phil Geiger, recently. Really enjoyed that. So it seems that I'm having quite a good run with the Unchained boys. But I guess for folks who aren't 100% familiar with your work, Joe, would you mind just sharing a little bit of information about kind of who you are, your background, and your role there at Unchained Capital?
Yeah, absolutely. Yeah, I actually watched the episode that you recorded with Phil. I thought it was great. Watched it over the weekend.
Cheers.
A little bit about me. I learned about Bitcoin. The first time I remember learning about it, at least, was back in 2017. I remember scrolling on Reddit and I either came across like our cryptocurrency or our Bitcoin or something at the time and discovered Bitcoin was like $1,000 or $3,000, around there, early 2017. And then I remember throughout the year seeing it go from 1,000 to 3,000 to 6,000 and then up to 18, 19,000. I had grown up interested in finance and investing. I'd been taught to buy Coca-Cola, IBM, hold it for 50 years. You earn the 2 to 3% dividend that you will receive, and the stock goes up like 1% per year or 2% per year. And that's kind of how you save for the future. Discovering Bitcoin, I was like, wait, this thing just did like a 20x in 1 year. What is this? So that kind of like intrigued me. Maybe it's kind of like a high time preference intriguement. I saw a number go up and I wanted some of the number go up for myself. And then down in 2018, during the bear market, I really started to dive deep into like what was really here because I thought that, okay, this is probably some sort of bubble, but typically like when there's bubbles, there's something there, whether it's a technology bubble or housing bubble. Houses are important, technology is important. So there's probably something here within Bitcoin slash crypto. And obviously during 2018, 2019, I recognized that, okay, Bitcoin is the true innovation here. So eventually graduated college, started my career as a technology consultant at Ernst & Young, then joined a Bitcoin mining company called Blockware Solutions back in 2021 and worked there for a little less than 2 years. Then joined Unchained towards the end of last year, fall of 2023. And now I'm on the product marketing team at Unchained, where I host the Bitcoin Frontier podcast. And then also, I just published a research report called Your Wealth is Melting. And then I just do a lot of other general marketing and product marketing initiatives within Unchained.
Wow, cool story. Because I don't know too many people who found Bitcoin via Reddit. Usually it's like a cesspit of nonsense. So it's quite cool. I
Yeah.
mean, everyone comes at it from their own sort of unique angle. I happened to encounter it via, well, it was the third time to be fair, but via Rug Pal. And so it's really funny how we all come at it from different angles. But to find yourself in product marketing with a finance background, having worked at E&Y, it must be quite an interesting turnaround, but it's kind of typical in Bitcoin. We find a way to work in the space, and it's not typically aligned with our formal education.
Yeah. I was interested in finance. I thought about majoring in finance, but that actually wasn't my technical major. My
Yeah,
major was information systems and then my minor was computer science. I studied like the technology side of things and then as a technology consultant, I was more like the product manager type role. I wasn't coding in my role at EY. I was just working with developers. So, yes, but now I'm in marketing, which is like still very different. So, I've kind of
totally.
bounced all over the place. But yeah, no, it is kind of funny how people just end up in Bitcoin after studying, various different things.
Yeah, totally. Absolutely. I mean, I did law, political philosophy, and property, and none of that is Bitcoin. So let's jump into some of the topics of the day. So I'll start just by saying, really enjoyed your Wealth is Melting report. And I encourage anyone who is listening or watching to go ahead and have a squiz of that because it really is super comprehensive. I've written a Bitcoin thesis myself, and there's a lot of proof of work in that. So well done on that work. I want to tackle one specific part up front, which is sort of the topic of the show. And from there, we can sort of branch out into various other Bitcoin related stuff. But love to just dive into the whole idea of Bitcoin versus real estate. And so perhaps we can just start at kind of a very high level, because this will apply equally to real estate as it does with stocks, bonds, and commodities like gold. Talk to us just about what your wealth is melting thesis, just at a kind of 10,000 foot view, and then we can sort of start going down a couple layers deep into real estate specifically.
Yeah, for sure. I think looking back over the last 200 plus years, humanity has become absurdly wealthy, right? We learned to fly and then we very quickly, relatively, landed on the moon. And then we, invented the telegraph and then very quickly we invented the internet. In the grand scheme of the last 2000 years, we've had so much innovation just within the last 200 years. And I think this innovation is accelerating more and more rapidly. And it's kind of changing how people should be thinking about wealth in general from like a personal perspective or for company or enterprise perspective. And the general thesis behind the report is that everything that we're saving in today, or all of these traditional assets that we've been saving in, can be perpetually produced or devalued by the free market, one of the two. And so, like you brought up real estate, for example, like we can always go out there and build more houses, build more apartment complexes. We've even built artificial islands off the coast of Dubai. So, like, we can build more of these things. Whereas Bitcoin is the one monetary asset that has, it's not just perfectly scarce, it's portable, it's durable, it's divisible, it's fungible. So it has these superior monetary properties, but it also has that, very unique characteristic of perfect scarcity in combination with those monetary properties. And so my general thesis was, if you hold wealth outside of Bitcoin, then entrepreneurs and the free market are going to go out there and try to extract that wealth that you're trying to store in these assets. So if humanity holds $300 trillion worth of wealth in real estate, then that means we're probably going to go out there and build more houses or build more apartment complexes, which marginally devalues the wealth that you've stored in those assets because there's now more of them. And so that's the general thesis. And Bitcoin kind of changes humanity's relationship with wealth itself.
Okay, well said. Okay, so that's a great sort of high-level overview of your general thesis there. And as a general comment, I tend to share your sentiments there. Everything, relatively speaking, to Bitcoin can be devalued, either competed away or produced more of. So when we're talking about real estate, I thought perhaps let's frame it up this way. We need to be as charitable as possible to real estate, because it's nice to steel man things instead of offering straw man arguments. So I'd like us to try and put on our real estate hats and see how best we can do to provide a balanced sort of perspective on real estate as an investment asset class. So as we spoke about before, Joe, I think we are both in alignment on this. And your primary residence or your personal residence is not an investable asset. That's just completely separate. From my perspective, it's a lifestyle asset, much like you would also think about like a holiday home that you have in your family. It's not strictly speaking an investment. Yes, if you see some capital growth, wonderful, but that's not the primary reason you do it for. So our conversation today is largely limited to real estate as an investment. And I mean, whether it's commercial property, residential property, apartments, freestanding homes, et cetera, et cetera. All right. So, I mean, we're on the same page there in that respect, aren't we?
Sounds great to me.
Cool. Okay. So when you think about some of the advantages of real estate, just from an investment perspective, what are some of the things that come to the top of your mind if you were to be charitable?
Before Bitcoin existed, real estate was actually a pretty great asset class for people to store wealth into the future, right? When you look at real estate, you can actually utilize extremely cheap leverage. In the US, it's like basically financed by the Federal Reserve. They buy the mortgage backed securities, which enables you to borrow money at some of the lowest interest rates in the world at a fixed duration or fixed interest rate over a very long 30-year period. Like there aren't many rational lenders that would actually want to lend, you $500,000 to buy a house and then have that fixed very low interest rate available to you. That's kind of like a government subsidy to some extent to
Yes.
have access to that mortgage. And it basically enables you to short the dollar in extreme size or short your local fiat currency in size and then go long a semi-scarce asset, right? Yes, real estate's not perfectly scarce, but it is much scarcer than the dollar, and that's why it keeps going up, especially in dollar terms over the last pretty much forever, last 100 plus years. It's a phenomenal way to go short the dollar, long a semi-scarce asset that everyone effectively needs. We haven't had a great way to mass produce real estate. We're getting better and better at producing like the specific components, whether it's lumber or just labor or robotics to kind of put the houses together, 3D printing. But there hasn't been like an amazing, crazy breakthrough that makes it super abundant for everybody initially. So it's very reasonable and it makes a lot of sense that a lot of people have used real estate as a store of value over the last 50 plus years. But I think now that we have this opportunity cost, which is just holding cold storage Bitcoin, I think that completely changes the game. So yeah,
Yeah.
I think real estate was a great investment and you'll still do well in dollar terms, but I think Bitcoin completely changes that.
Yeah, 100%. So I think the key thing is there you need to understand Bitcoin. And if you haven't understood Bitcoin, you're definitely not going to see that sort of puzzle put together. And I think what's unique about the US market relative to most places around the world is that you do have these long-term fixed rates. And I mean, it just is so incredibly tempting, particularly in, these areas. Let's talk about pre-2020 now. I think it was Austin that did really well. I think Miami did really well in Florida. And so you had these little pockets that did exceptionally. And these people were able to get fixed term loans for like 2%. So it was really in many ways kind of a no-brainer. And couple that with the benefit of actually many people actually living in those homes, you can actually say, well, yeah, that makes sense. Here in Australia, it's a very different story. We can only fix for about 3 years. So we had a situation where during COVID, people got, I think it was something like 2-3% interest loans, but those were fixed for like a period of 3 years. And a lot of people came off that over the last little while. And so they've seen sharp spikes since they've raised rates now to sort of 5.5, 6%. It's a different kettle of fish, but in the US in particular, I can't think of a better way to sort of short the dollar if you don't know about Bitcoin. The other thing that I think we should be touching on there, Joe, is one of the things that real estate does that perhaps Bitcoin doesn't do is that cash flow piece. And that's something that I've given some thought to. So do you think it would be fair to say that let's assume you're not a Bitcoiner and you don't understand the opportunity cost, and perhaps you're at a stage in your life where you are changing the composition of your assets such that you want it to have a very low volatility. You're sort of towards the end of your career and you want to start transitioning into retirement. And perhaps what you'd rather do is have a portfolio of relatively stable, in fiat terms, real estate assets that can provide you with cash flow.
Yeah, I completely agree. If Bitcoin didn't exist, a large part of my portfolio would probably be real estate. Before Bitcoin, I think it's one of the best asset classes that you can hold, like you said, right? In dollar terms, it's going up. You can use cheap debt to acquire it. So you can buy it with money that's not even yours. And it has pretty stable cash flows. Rents are always going to go up. If in the US, if you get into the 30-year fixed rate mortgage, your mortgage payment will remain the same over the next 30 years. Yet you'll be able to slowly increase your rent in dollar terms over the next 30 years. So over time, your cash flow can actually keep going up. Effectively, the renter is the one that's paying off your mortgage for you if you bought the house at a low enough price to where the cash flows from the rent covered, the mortgage, home insurance, property tax, and maintenance and
Yeah.
whatever else. But yeah, I mean, it's a great investment if Bitcoin didn't exist. In fact, it's kind of unfortunate actually, I feel like, because I think when this is kind of, slightly different topic, but I'll bring it up real quick and we
Yes,
can
go for it.
maybe go into it later. But when the money's broken, we resort to hoarding things that shouldn't be hoarded. And that's what we've been doing with real estate. And whenever, the money's broken, we all start hoarding real estate because that's one of the best ways to save when the money is broken. Then real estate becomes abnormally expensive for most people, and the cost of living goes up. It's harder to start a family. It's harder to just take risks because you have to, lock yourself into a very high mortgage payment for a relatively long time. And so it's kind of unfortunate that many people around the world are hoarding real estate to save for the future and get that future cash flow, when there's now potentially a better money that would enable people to not hoard real estate and would enable people to just save something like Bitcoin. And I think the world would be a better place because there would be marginally more real estate available for people to just live in and consume, rather than investors to hoard it, push the price up, and then extract rent from it and effectively rent seek on the rest of society.
What's even crazier is that, and I don't know to what extent this is happening here in Australia, but I certainly know it was happening in the US once again during COVID and whatnot, was, the likes of BlackRock buying up those sort of single family homes and that sort of thing by the thousands. And that just kind of speaks to your point of using it as a way to kind of store your wealth rather than actually for its utility function. And then obviously, the other problem we've got with real estate is that it's not divisible. So it's not as if you can buy a little piece of it. So it tends to accrue in the hands of those who have large amounts of capital. And then what's more is, if you've been playing this game quite smartly for an extended period of time, like BlackRock, or perhaps a savvy, wealthy, high net worth individual, you've got a lot of equity in your properties because you've played the game. You've kind of just shorted the dollar and you've ridden it up for a little while. And now suddenly you've got thousands of, hundreds of thousands of dollars that you can then extract and then put down on another home and kind of rinse, repeat. And it's funny, like I know people here who don't really get Bitcoin, but they get the property game. And it's like other people's money to invest in scarce assets. And then we refinance and then we do it all over again. And so it does lead to this phenomenon that you're describing of real estate being used as a sort of store of value rather than for its utility function, pushing it further and further away from ordinary people. And we're now seeing a situation where it's not enough just to have a single household and the median wage earner. It's now kind of, you've got to have two people. And there's all sorts of flow and consequences from that, as you say, like, well, maybe we don't need to have two kids. Maybe we just have one, and all these types of things. How do you think people in TradFi think about that issue? Like, if you were to try and put yourself in their shoes and you go like, look, have a look at this graph, have a look at wages, have a look at house prices. Maybe it's from 1971, I don't know. But say like, what has happened? How do you think they'll respond to that? Because I haven't heard a satisfactory answer from their side as of yet.
Yeah, I guess how do you think they'll respond to that in terms of what do you mean exactly?
In terms of like, if you said to them, hey, by the way, there was a time where, the multiple on the median wage was 3, and now you just need to work for 11 years here in Sydney to put down 20% of the sort of median house price. And it's no longer okay to have one person earning an income. You actually need two people because you can't afford it on one person's salary. And you pose this challenge to them and you say, why? Just explain it. Like, do you think, I mean, how would they think about this problem? Have you got any insight there?
That's a really good question. I mean, to me, it makes sense. And like I've tried to talk about it with some of my friends that are working in TradFi and whatnot. And to me, it makes sense. The money is broken and people are resorting to hoarding things that shouldn't be hoarded, like real estate. And that's effectively raising the price of real estate for everybody else. And so incomes might not be going up because people aren't hoarding workers or whatnot. Workers are still making the same wage, but the dollar continues to get debased fairly rapidly. And especially when you compare the dollar to very scarce assets like real estate, semi scarce, but real estate is one of the most scarce assets in the world, then the price of real estate is going to keep going up because people are still going to want to save over time as humanity gets more wealthy, technology advances, we all get more wealthy because of free markets, capitalism, technology, or whatnot. And so we're trying to store all of this wealth that we've unlocked with globalism, free markets, capitalism, yet we don't have any place to store it in, right? So like
Mm.
it makes sense that we would hoard real estate and the prices would go to crazy heights. And I definitely think it's bad. I think without Bitcoin, this is where like TradFi and certain groups of people would be like, this is where we need more government intervention. We need to make housing affordable. And the only way to do that, and from their perspective, would be to add in more subsidies and more, centralized incentives to make it affordable for people to afford houses. Because I think, like you said, it is pretty much undeniable that buying a house is relatively unaffordable compared to what it was, 50 years ago.
Yeah.
When you look at the price of a house relative to the income that a typical person is receiving, it's like different worlds. Despite the fact that like humanity has become so much more productive and efficient and wealthier over the last 50 plus years because of technology and because of capitalism, we're still somewhat, for some reason, going backwards because the cost of living is actually going up in real terms relative to your income. I think they know something is really broken, but maybe they can't quite tie that like the money is broken and that's how to fix it. I think maybe they're probably more likely to lean towards we need to fix it, but we need to work within the existing system and the existing rules that we've been given as like a
Yeah.
society and as like within the monetary system. And we need to provide additional incentives to fix the problem, which would really just be a short-term band-aid.
Yes, that sounds exactly what they would do.
Yeah.
Exactly. It's like we need to incentivize more building of houses. There's a shortage of houses, so we need to incentivize that. We need to import more people to the country. We got skill shortages here in Australia, or we got single mom grants where we say, don't worry, we'll just there's 10,000 ladies around Australia, and they get to only put down 5%. There's been programs, and I haven't even bothered to go and see if they've actually been affected, but the government goes, you don't have 20%, don't worry. We'll cover like half of it, and then we'll own a slice of your home. It's just like all of these, like they're all short term. And it's typical of electoral politics because they don't really give a shit what happens in 10 years' time. It's really like that's just sort of beyond their tenure. They're already they've probably retired by then and enjoying a lifelong salary courtesy of the taxpayer. But yeah, it's one of those things. I don't see how you can't come to the conclusion that there's something fundamentally broken, like really fundamentally broken, when ordinary people just can't afford their homes. And here in Australia, they call it the bank of mum and dad, which is basically your parents being the 10th largest bank in the country because
Hmm.
they are the ones who end up having to subsidize those deposits for a lot of people. So, okay, I guess that explains a bit about that. Now, let's think about some of the downsides there, Joe, of investing in real estate. Have you got any thoughts around like some of the challenges that you would think? I mean, besides the fact that obviously you're foregoing the opportunity cost of investing in Bitcoin, but you hinted on some of them earlier with regards to operating costs and that sort of thing.
Yep. There's a number of downsides with real estate. One that comes to mind is property tax. This is a carrying cost that comes with ownership of the property. To some extent, you can argue that you can't even own real estate. You're perpetually renting it from the government. That's one way to look at it. If you have an asset, you don't want to have to perpetually pay to have the asset. And if you don't pay to have the asset, then you lose access to the assets. So that's not great for real estate. Another one is maintenance costs, right? Like a house is just lumber and a bunch of metal and stuff put together, right? Like that literally decays over time. That's just their very nature. Also, things go out of style, right? Paint chips and you got to repaint it. You have to change the countertops. The floors get destroyed. You forget that people actually live in houses and you need to replace the things that are in the house, whether that's the floors, the walls, the sinks, the bathrooms. This is more like ongoing carrying costs that you have to have just to maintain the value of the asset or like the real value of the asset.
Yeah.
Um, those are a couple of ways that I think of looking at real estate. Another way is the cash flow, which some people would say is a good thing, right? Real estate is going to provide you cash flow, but like what valuation or what multiple are you buying that cash flow at? If you buy a house for $500,000 and the rent's very, very low relative to $500,000, maybe the house is actually like decaying faster than your positive cash flows from the rent that you're receiving.
Yes.
Obviously, like in Bitcoin terms, it's super obvious, but in dollar terms, it's not very obvious. That's that. And then also like houses are fixed in one location. Like you can't just pick up your house and move it elsewhere. Like if your government gets out of control, whether that's your federal government, state government, local government, whatnot, they can crack down. They can say like, hey, you have a tenant in your house today and he just can't make rent for whatever reason. Maybe there's like a deadly or a supposedly deadly virus that's going out in the world. you can't evict him anymore. And now you have this person that's living in your house that you technically own, according to the government, and you can't even kick the person out of your own house, and he's
Yeah.
not paying you to live in your house. So things like that can happen. So yeah, there's like a lot of downsides, I think, with the real estate that a lot of people don't necessarily think about. If everything works out as planned, like you expect, then real estate could be pretty good, but there are a lot of downsides.
The one thing that struck me there, Joe, was like it's not even yours in a real sense because there's all sorts of limitations. You can't just go and build sort of multi-stories. You don't necessarily like have the ability to just do whatever you want on your land, which you could argue maybe is a good thing. Like you'd hate to have this beautiful area and then suddenly someone puts up a concrete 20-story building next door to you. I mean, that just kind of would depress all the values around you, but you don't necessarily have that kind of freedom. Here, we're trying to build a granny flat. I've got to keep it under 50% of my square footage of the entire block. So you can imagine there's some bureaucrat in the background going, is that 49? It says 51. Can you just do something and make his balcony smaller, please? So you got like stupid shit like that, which would drive me a little bit mad. There's interest rate risk. Interest rates can shift dramatically, and we've seen that in the States. And if you've kind of gone a bit far over your skis and you've taken up too much debt, and you haven't really thought about the future, that could be a problem. You could have a non-performing tenant to your point, but you're still stuck paying. I mean, what could be more painful than having an asset that perhaps isn't going up in real terms, at least relative to Bitcoin, and then you're sitting there and you've got a tenant who's not performing, and you still have to fork that out. And so the bank's not going to care. They're going to be like, hey, bro, where's my money? So there's all these pretty obvious risks. And then there's the whole sort of, the yield relative to the valuation. At what point does the cash flow make sense? Because the higher the yield, the greater the risk on average. That's just generally the sort of principle. So if you go into these far outlying suburbs, you get a better yield, but the capital growth might not be there long term. But then you've also got the risk of default with tenants and that sort of thing. I remember during, I think it was 2019, it was pre-COVID, I went and did some work for South African clients while I was in commercial real estate. And I went to Sydney to go and check out some buildings. And the cap rates, which effectively equate to the first year's yield, were in some instances the strata title, which would be like kind of individually owned offices within a building. The yield there was like 2% and something like that. And I was thinking to myself, like, there's just so much execution risk and maintenance. And those were the gross yield. So it was like, I don't know who wants this sort of crap. The saving grace for real estate is the fact that you can use other people's money. For
Yeah.
me, that's really it. And so once you play the game long enough, you've got enough equity that effectively has been accrued on the back of free money by the bank. And so I think that's really the key point. So if we were to just tie this little real estate piece up now, let's imagine you're the hypothetical Bitcoiner and you're sitting on a nice stack and you're going, oh, perhaps your partner is like not that all in on Bitcoin. She backs you, but it's like, I want a house, man. I'm sick of renting. And this is a very common thing. So let's think through that problem there, Joe. I mean, what are some of your initial thoughts with respect to, all right, we're totally on board with the idea that investment as like real estate is just a no-go from a Bitcoiner's perspective for all the reasons kind of we've described. But what about owning your own home?
That's a great point. I think there's nothing wrong at all with owning your own real estate, like owning your own personal residence. Like, there's nothing wrong with that. I just think it's important that when you're thinking about that from your own perspective, that you should be thinking about it as, okay, this is personal consumption for like my family, rather than this is something that is going to be the best way to save wealth, 10 years or 20 years into the future. So I think a lot of people are scared to keep renting or scared to rent because they feel like they're falling behind. And if they want to save for the future, they need to get a home to save for the future and invest.
Mhm.
But I don't think that's the best way to think about it. Yes, it's like maybe better. Like maybe it's good in dollar terms to buy a house just to live in it and have no cash flow. But you're most likely probably better off if you can survive the volatility or you're comfortable with the volatility. Just using that money that you're going to use to buy a house to save in Bitcoin, you're probably still going to outperform even with the subsidy of using someone else's money to buy the house.
Mhm.
So I don't think there's anything wrong with having a personal residence. I don't think there's anything wrong with buying one. That capital that you're using to buy the personal residence, I think you just need to realize that you're consuming the house, you're not investing in the house, and you'll probably underperform Bitcoin with that capital. And if you're cool with that and Bitcoin is your money and you're fine that like, hey, I have plenty of Bitcoin. If Bitcoin's actually going to $1 million plus, then I probably don't need much more Bitcoin. My family will be fine. Then there's nothing wrong with having the personal residence. It's just like you got to understand the trade-off for you personally.
Yes. Yes, 100%. I think a lot of Bitcoiners into underappreciate the complete pain in the ass it is to rent. And particularly if you're renting like nice properties that are not necessarily on the market for long periods of time. In other words, it's not a landlord who's just invested in a property and is just going, this is my investment property. The nice properties are often those where it's like somebody who's bought the property and is, okay, I need to rent this out for 12 months while I do something else. And so you find yourself moving around a lot. I lived in 7 homes in 5 years here in Australia, and I'm finally in my 7th now. And I'm like, thank God we bought it. And I totally was aware of all the opportunity costs associated with that. And it hurts, because I do know what the long-term cost is ultimately going to be. But there's also a huge amount of comfort in that peace of mind, knowing that I don't have to deal with any agents. I can hang whatever I want on the wall, and it's fundamentally mine. But yeah, I suppose what I would think about if I was somebody who was not incredibly itchy to get on the so-called property ladder, but somebody who was kind of early days in that journey, I would say if you have the capacity to rent and the flexibility to do so, and you can live lightly, you don't have a family, and pets and all that kind of stuff, and it's like maybe it's you and your partner, and you don't mind sort of apartment living and all that kind of jazz, and you can keep yourself quite light. You don't have a lot of things. Maybe the right plan in those circumstances say like, hey, if you can get your partner on board and say, listen, if we can just ride this out for the cycle, if we can just do like a 4-year cycle, the lowest return that we've ever had over any 4-year period is 100%. So we can effectively get a much, much better property. So the longer you can extend that, you could even go quite extreme and say, well, let's do it for 8 years. Think about what one could do with your Bitcoin over 8 years. But there are all sorts of trade-offs involved in that process, having to deal with endless amounts of agents and inspections and all sorts of crap. And there's no security of tenure. You could get booted out, at the end of your lease, and then you're back to square one. And maybe you've got kids in the local school, and now you can't get into the suburb because the suburb's, very tightly held, or there's all sorts of things like that. But I think fundamentally that's how I'd be thinking about it. But I share your sentiment there, Joe. Your personal residence, there is certainly a lot of value to it, but you always must be aware of the opportunity cost, and you need to be able to live with that upfront. I mean, what about if you said something along the lines of like, hey, imagine your Bitcoin in 5 years that you put down for a deposit has quadrupled. How do you feel about that? If you feel okay about that, then do it. Go for it. Something like that. You've got to imagine that worst case, because you don't want to be the guy sitting around at a barbecue in sort of 15 years. Well, when I was young, I bought a house with
Yep.
Bitcoin and now I'd be a billionaire, or whatever. So, okay. Awesome. Well, I appreciate you indulging me on this real estate journey, because it's not strictly in the world of Bitcoin, but I thought this is something that some people have been reaching out and asking me to chat about, and I really appreciate your thoughts. Let's talk specifically about Bitcoin. We just experienced the halving. What are your immediate sort of thoughts, reactions post-halving? The price is down next to nothing. Most of us never thought it was going to suddenly run up, but what is your kind of perception, and what do you see ahead for the next sort of 12 to 18 months?
I feel like having discussions are always so fascinating to me because there's always so much debate around halvings, whether they're priced in or not priced in. And I also think it's funny because it's a debate within the Bitcoin community as well. TradFi people, I would say, would certainly argue that halvings are not priced in, and because it's a publicly known event. And then
Mhm.
even in the Bitcoin community, it's like, well, it is a publicly known event, so obviously it's priced in. And in the short run, like you mentioned, it clearly was priced in. Right when the block 840,000 came out, the price of Bitcoin did not change whatsoever. To some extent, it is priced in, but then, like, to some extent, the market has been trying to price in Bitcoin halvings for the last 15 years. And that's probably why it's gone up like 130 something percent compound annual return for the last 13, 15 years. And it's probably going to continue going up at a pretty extreme growth rate for the next 15 years. I think that's kind of what the market is doing. It's trying to price in the 2024 halving. It's trying to price in the 2028 halving. It's trying to price in the 2032 halving. And
Mm.
it's doing this like all at the same time. and it creates these like super crazy parabolic bull markets that are completely unsustainable, like 2013, 2017, 2021. Maybe, later this year or 2025 will be something similar where we go on another crazy parabolic bull market where like the market is trying to price Bitcoin correctly. And, the correct price of Bitcoin is probably a lot higher than where it is today. Over the long run, it's probably going to continue to be a lot higher from where it is today. But yeah, I think like halvings play kind of a role in that. And over time, Bitcoin gets more scarce. There's less miner sell pressure on the market. Halvings play a role in that. But I also think like there's many other factors that contribute to Bitcoin bull markets. And I think like the major one is like just general macro liquidity. Are there more dollars or fiat currency units in the system? Is that trend, growing in the short term? And if there is, then people are going to be using those freshly printed dollars or freshly lent out dollars or whatever currency unit that you're talking about. They're going to be using that to funnel wealth into scarcer assets that are scarcer than the dollar, whether it's real estate, gold, Bitcoin. And to me, Bitcoin is the best asset because it has all of these halvings that eventually have to zero or get cut to zero.
Mm.
And yeah, I think Bitcoin is the fastest horse. And I think that's just been correct over the last 15 years. And I think it will continue to be correct over the next 15.
Yeah, I agree. You put out a poll on X, but you said something along the lines like, where do you see this cycle's top? I think it was something along the lines of like, it was 125, 300, and there are a couple of like high options in that. What's your sort of gut feel?
I mean, I
It's
love
open.
asking this question to people, but I hate answering this question. I think the truth is no one really has any idea. If I had to be like a betting man and guessing what might happen, I would say like something like right now, like I know the models are people hate the models like stock to flow and power law model, but like if I had to guess where Bitcoin's going to go, it's probably going to follow one like those roughly those paths, one of those two paths. And over the last 15 years, their paths have been pretty similar, actually. It's only up until like, 10 years from now that they start to like really diverge. Both models to the upside, like Power Law model over the next year predicts 400,000 or so, like top side or kind of out of the range or starting to get out of the range of the model. And then stock to flow would be like $1 million would be starting to get out of the range of the model. Somewhere around, 400,000, 500,000 seems the most probable, but anything could really happen. So like short to medium term, which I would say is like next 24 months, who knows exactly how high it goes. I think it
Yeah.
goes significantly higher than whatever we're at today, 65,000 or I forgot exactly what it is, but
Yeah.
it's going to go significantly higher today because of easing macro conditions and the having just occurred. I think just purges the weakest miners on the network and enables less selling, less day-to-day selling in the market. And then the price just kind of starts to melt up. And as the number keeps going up, like people are captivated by number going up, like I was in 2017. And that
Yes.
enabled me and probably others in the future to like buy a little bit. And then that enables them to dive in and try to learn about it a little bit more. And then they learn it's a lot better money than their current money. And then they just start allocating a lot of wealth to it in the future. So if I had to pick a number, like maybe like 400,000 or so, 500,000. But I think if it goes that high and like inflation is not super crazy, I think it would be very reasonable to expect like another pretty extreme bear market following that.
Yes. Yes. If we got to those sort of levels, it would strike me as being somewhat frothy and there would be quite a significant pullback.
Yep.
But I think, yeah, my base case is actually quite bearish. I'm the resident bear, so I don't get as much engagement on X. But I tend to think that it's probably going to be sitting around 150. But anyway, that again, there's not a huge amount of data. It just never does what we expect it to do. The one thing that is certain is that Bitcoin never does what you think it will do. It certainly is really exciting to think about, and the retail interest is not there in a material sense. So they typically only come in when things are going wild and buying at the top. And so we're still looking at it, these levels today. The smart money is still buying at this point. And if we couple that with the idea of sort of the ETFs just slowly bringing in something like $30 trillion worth of the financial advisor sort of segment of the market, which will come in drips and drabs over time, I think there's going to be a huge amount of demand. And this doesn't even discount the fact that you could have a situation where there's a massive announcement overnight that a nation state has been doing something, or this corporation has been quietly stacking, and suddenly, all bets are off. So I think that's always an exciting thing to think about.
Yeah. Yeah. I mean, to me, nothing would quite surprise me to the upside. I mean, you can wake up tomorrow and if Apple decided to embrace like the Michael Saylor type strategy,
Yeah.
$1 million Bitcoin could happen pretty fast. And
Yes.
then, like you said, like if you know, right now we live in a world where there's 100 something countries in the world. There's a small group of central banks that are like elite central banks, but a lot of countries have their own national money, right? And they all have, and everyone's kind of using this national money that has been used for the last 50, 100 years or so. And we have this printable money that everyone's been using, everyone's stuck on, everyone's thinking about like their finances in terms of this printable money.
Mm.
And then we have this printable money that now exists. It's still relatively new, so people don't get it, they don't see it. But at some point, it does make sense to print the printable money and buy the unprintable money. I'm sure it happens like secretly at first. The Federal Reserve or whoever is not just going to come out there and be like, okay, like we are going to buy $1 trillion worth of Bitcoin or $1 billion worth of Bitcoin. Someone's going to do it privately, or it's like going to be some sort of like secret government operation, may already be like happening. Central banks do accumulate gold. But I think it's somewhat inevitable. Either they're going to start doing it, or like the people that hold the money are going to start figuring out that like, hey, like why am I holding claims on this future printable money when I can buy money that's actually unprintable? And also the adoption of this unprintable money is still like less than 1%. So like there's massive upside just for getting into the unprintable money once you realize that the rest of the world is about to have to buy or about to want to buy the unprintable money as well. So like there's converging factors all at once that the upside is something crazy. But short to medium term, it could go sideways forever. It could, or not forever, but it could go sideways for the next 2 years, 5 years. But eventually it's probably going to go up in a pretty big way, if I have to guess.
Yeah. Yeah. It's going up forever, Laura. When you talk about like printing, printing money to buy Bitcoin, there's sort of like this analogy I'm drawing in my mind here, where in the world of kind of flag theory, sovereign individual, fork turning stuff, where you're kind of going, there are countries in the world that are so-called legacy brands that are resting on their laurels. They were like, hey, we're so good, we're powerful, we're attractive, we've got all economic opportunities. So just think of like the G7 as an example. And then you've got these sort of smaller players who are trying to become kind of relative havens of, whether it's capitalism or whether it's safety, or you can look at El Salvador as being an example where they're like, we're not going to be able to outcompete the US on pure economic might. It's almost like in the global competition between nations, if you're a small nation, you've got to think about how to fight smart. You're not going to try and arm wrestle the guy who's like 200 pounds heavier than you. You're going to try and jiu-jitsu him and grab him around and choke him out. So I'm going somewhere with this analogy. So the smaller countries who have the least to benefit by the current system, who have to actually produce real world goods, and there's real energy that goes into production of goods, whether it's bananas or resources or whatever the case may be, and get dollars that are being printed by the US, who's abusing its exorbitant privilege by all accounts. They are the ones who stand to benefit the most. And I would expect them to be the ones to be buying Bitcoin with their own printed currency, because, obviously Bitcoin is tradable in pretty much every country around in the world. And so I think it will be these legacy brand countries, the G7s of the world, who are the last to employ that strategy that you're describing, because they are the most intertwined in the system, they benefit the most from the system, and they don't see the problem because they're so in it. Whereas the people on the outside are kind of going, maybe we should get some of this. And especially when you think about what's happened in the last few days, in particular, where the money that was confiscated from Russia is now going to be deployed to Ukraine. I mean, you think to yourself, why would you want to hold US treasuries? Even if you're an ally of the US, like that's like a massive geopolitical sort of signal that says, hey, guys, this is not the risk-free rate that you thought it was. So yeah, I think that is the one piece that is so uncertain, but it could have the biggest outsized impact if you think just about the ability. I mean, if we could create our own sort of printers, I mean, I'd be going absolutely mental. One question I did want to ask, Joe, that perhaps we can sort of wrap up on is the notion of hyper-bitcoinization. What do you think that actually means, and when does it happen in your mind?
Yeah. It's a pretty fun question to think about. My view of hyper Bitcoinization is when the world is composed of billions of individuals, and a large majority of these individuals are using Bitcoin as their long-term savings and unit of account for economic calculation. I think like if you have those two keys of people using Bitcoin as long-term savings and people using Bitcoin as a unit of account, then I think that's, at least in my mind, qualifies as like probably hyper Bitcoinization has
Okay.
occurred. On like a time horizon, for something like this crazy or this far out there, I tend to like don't give it a date. I think it could take like decades from where it is today. And I think it's still fine if it takes decades. I still think like even if it does take decades, the compound annual growth rate of holding spot Bitcoin today is probably still going to be pretty massive and will definitely outperform like, real estate or gold or S&P 500 or US Treasury bonds. But it could take a while. It could also happen really fast, right? Like I mentioned, nothing would really surprise me to the upside. And we do have entities that have money printers and can print money that people still value today. And so if things get out of whack, they can get out of whack really fast. And it's kind of like once one person does it, then everyone else is probably going to follow, because otherwise you're just going to let one money printer buy all of the unprintable money. Or
Yeah.
or people that have the unprintable money are just going to be like, I'm not selling this unprintable money for printed money. I'll sell it for maybe real estate or for personal residence or for a business that I can own and acquire and has cash flow. And maybe if I buy at the right valuation, it makes sense to own the business. But yeah, I think people will figure out that there's no reason to actually sell unprintable money for principal money. And I think it's eventually going to happen, but I don't know exactly how fast it will happen.
Yeah, it is crazy to think. I mean, I tend to believe it probably won't be in my lifetime. So again, maybe it's just the resident bear in me, but anything could happen. As nothing would surprise me to the upside, to your point, gradually and then suddenly. Do you believe in that world that fiat currencies are a thing still, or do you think it's just that we have opted out of fiat currencies? They're still there. Governments are not going to suddenly go, yeah, no, we're ditching the dollar. Thanks, we'll do Bitcoin. They still want to print their own money. It's just that we will say, no, I want to be paid in Bitcoin. I denominate my savings in Bitcoin. And, if you're a business, you say, here's my fee, but here's my Bitcoin fee.
Yep. Yeah, I probably take like the Michael Saylor approach here, where I think the dollar and Bitcoin will likely coexist for a significant amount of time, in the sense that like, okay, you like of all fiat currencies, the US dollar is probably going to be the one that survives the longest, in my opinion. If the dollar collapses, I think probably all of them are collapsing, and maybe we're on a Bitcoin standard, or like the world's going into not great places. Maybe we're using like bullets and guns and gold for
Oh,
money.
no.
Unfortunately, hopefully that won't happen, but anything's possible.
Yeah.
But yeah, no, I think the dollar and Bitcoin will probably coexist for a while. I think decades from now, whenever that comes, and people are like, why do we even need to hold these dollars to begin with? Then maybe we go on like a full on Bitcoin standard where like there's just no fiat money involved whatsoever. But I think that it's so far away, and it honestly doesn't like matter too much. Like I think like Saylor's talked about this on Twitter Spaces before. Like he thinks Bitcoin can go to 5 million, $10 million just with the dollar and Bitcoin coexisting, and not cause hyperinflation, keep some stability in the world in terms of like geopolitics and like keeping the US as like a power over potential foreign adversaries. I think that would probably be best, like to have a relatively slow transition where we like the US remains a pretty solid global power and is not like too authoritarian and too demanding and too crazy for a large portion of the world. But eventually, once Bitcoin is a large portion of total global wealth, then it becomes like, okay, Bitcoiners kind of have all of the wealth. Maybe we just like kind of fork off in terms of like geopolitics, and we have our own areas and we don't need government money, and maybe like the big Bitcoiners create like this new free land, or they take over a government via wealth or something, and just create a new place where there is no fiat money. So I think that's super far down the line, or at least I hope it is, because I think I'd rather have Bitcoin grow at like 50% per year for the next 20 years and still have dollars coexist and still have America coexist.
Yeah.
I think that'd be like a pretty safe world still, or the change wouldn't have occurred super fast, but in a bad way. But I think eventually, yeah, it potentially makes sense to have no fiat money being used at all in the very long run.
Yeah. Yeah, yeah, I think so. It's just a question of timeline, I reckon. A lot of Bitcoiners, I think, tend to, yeah, would think that it happens a lot sooner than I think in reality. Somehow we might underestimate the ability of the state to continue coexisting. But generally, if we have to look directionally, your point earlier about, potentially forking off, creating our own little Bitcoin sovereign states, it's not delusional in the slightest, in the sense that, we're seeing there are more nation states today than there were 30 years ago, because even within nation states, people are, surprise, surprise, not just this homogenous clump that like to be lumped together by arbitrary lines dictated to by centralized authorities. So we want to hang out with people who share our values and who are similar in many ways to us in that sense. So I see that happening, and that's my dream, man. I'm hoping that there will be places in the world that will be bastions of freedom and capitalism, and kind of just live and let live. Do you know what I mean? Last night, I thought it was appropriate to mention to my wife that I just want to give you a few quick pieces of information that we don't have to act on, but this is what's happening here in Australia. We've got an e-safety commissar going head to head with Elon Musk at the moment, saying that he's dangerous to democracy and all these kinds of things. For there were certain videos of a recent terrorist event that went up on X, and we've got MPs calling for him to be jailed. We've also got some taxes that are being debated, where if you hold over $3 million in your superannuation, which is your pension, that the unrealized gains will be taxed at 30%. Unrealized gains, and it's not
Oh,
going to be indexed. So guess what? Like, eventually, over a long enough timeline, like, everyone falls into that bucket. And so you're like, I suggested, like, these are just two little signposts. Like, we don't have to do anything, but just directionally, I'm not liking this. So let's just see where things go. But ultimately, I want to go where there's people that enjoy freedom, capitalism, and as close to just live and let live. Like, just leave me alone. And I think Texas is one of those kind of places. And yeah, and so I'm pretty envious of kind of what I see in some parts of the US, but then I look in other parts like California and that sort of thing, and I go, yeah, not for me.
yeah, for
Yeah,
sure.
awesome. Well, Joe, thanks so much for your time, man. I really do appreciate it. And yeah, and thanks again for indulging me on this real estate quest, just because I thought it was a conversation that some people were keen to hear, and I hope that folks found some value in that. I would also encourage everyone to go and have a look at your work. The report you did was really good at just trying to help kind of put Bitcoin in context relative to everything else, and to understand how everything else can be effectively debased relative to Bitcoin. So great work there, Joe. Did you want to tell the audience where they can find you, where they can find your reports, and we can close it up?
Yeah, absolutely. Yeah, first, thanks for having me on. This was awesome. Glad we could talk real estate and Bitcoin. It's
Yeah,
two fantastic topics. One, you can find me on Twitter or X at 3Capital, and it's at III Capital. That's my username. Also on YouTube, you can just search Joe Burnett Bitcoin. Should hopefully pop up number one at this point. And then for the report that we talked about a little bit, your wealth is melting. You can go to unchained.com/melting and you can check that out. And if you want to figure out, one of the best ways to hold Bitcoin, I think it's with collaborative custody with Unchained. Check them out, unchained.com.
awesome, man. Joe, it's been a real pleasure. Thanks so much. We'll see you
Thanks for
again.
having me on.